Hey, what's up, everyone? Good morning, morning, morning. GM to everyone. It is Monday, November 25th. Wow. November 25th is the last week of November, and then we start moving into December. We have a short week this week. I want to remind you all. It is Thanksgiving week in the U.S., so Thanksgiving's on Thursday. Markets are going to be closed on Thursday. Friday as well is going to be a half day. So it's a 3-day week in terms of trading and being active in the markets this week. And generally speaking, these weeks are surrounded by lower volume, lower volatility, which generally presents a slower grind to the upside, as we've seen so far with the gap higher here on the Sunday session and the continuation of that momentum move. I'm still positioned looking for the bullish momentum and looking for that bullish stride to the upside, seeing if we can get that continuation throughout the beginning of the week. We got 3 days of regular trading with lower volume generally expected. We also have Black Friday continues on at TRADEPRO Academy. We're going to be doing another webinar today on the member side of things, talking about the continuation of our A+ setups that we broke down last week as well on Friday. So we're going to continue that this week. And then in a few weeks, the second week of December, what we're going to be going through is we'll be diving into our mentorship that's available to all members. And a reminder, it's 60% off at TRADEPRO for the first month. So it's, I believe, like $80 or $85 or $87 or something. So I'll see you guys in there, and let's dive into some of this news. The unsustainable path. We're talking about the U.S. government deficit and DOGE. So the U.S. is closing out another year of red ink on its national debt as it surpassed $36 trillion for the first time. So it's a very gloomy fiscal milestone. And it's happening every several months, according to the Treasury Department, with the deficit hitting $35 trillion in late July, $34 trillion earlier this year. And it's also helping shift the conversation from talk into action. What is the with the next administration marking it a priority as it gears up to take the helm at the White House? So the DOGE plan, the hardest area to tackle, has been popular entitlement programs like Medicare, Medicaid, and Social Security, which have been major contributors to the deficit with no easy solution there. President-elect Trump has tasked Elon Musk and Vivek Ramaswamy to head up the newly formed Department of Government Efficiency, or DOGE, to cut the federal government down to size. So the new mission is also focused on the sheer magnitude of waste, fraud, and abuse, despite the onslaught from entrenched interest in Washington. So DOGE will plan and help end federal overspending by aiming to take $500 billion plus, right, in annual federal expenditures that are unauthorized by Congress or being used in ways that Congress never intended, from $535 million a year to the Corporation for Public Broadcasting and $1.5 billion for grants to international organizations, to nearly $300 million to progressive groups like Planned Parenthood. Musk and Ramaswamy wrote in the WSJ op-ed, many federal contracts have gone unexamined for years. The Pentagon recently failed its 7th consecutive audit, suggesting that the agency's leadership has little idea of how to annually budget more than $800 billion is spent, right? More than $800 billion. It's insane. While interest rates are coming down due to the Fed's new easing cycle, cutting spending is never easy, with Trump's adding $8.4 trillion to national debt, including $4.8 trillion in COVID relief during the first term in office. And even if DOGE gets on the case, expect legal battles centering around executive overreach, statutory protections, and regulatory reversals. Other factors include how the 119th Republican-controlled Congress will handle the reinstatement of the debt ceiling and the expiration of Tax Cuts and Jobs Acts, as well as plans from other ranking officials such as nominee Russell Vought as White House Budget Office Director and Scott Bessent as head of the U.S. Treasury. So a lot of news, I guess, is expected around this, but also we have, not necessarily fully related, but we have the Fed's favorite inflation gauge this Wednesday. The PC is coming out. Again, since Friday is a half day, Thursday markets are closed, so generally it comes out on Friday. It's going to come out on Wednesday this week. the PC report in terms of inflation. We also have the Fed's meeting minutes, which come out tomorrow on Tuesday. Again, pushed a little forward based on the closure of the markets this week. In terms of equities, we have upside momentum move that happened in the futures here overnight last night, and a continuation here pre-market. We're very close to all-time highs on the S&P. The NASDAQ, again, big tech, slowing down, kind of pulled away from these all-time highs. And I am looking for that end-of-year rally still with big tech. It's giving us like tastes here and there, but ultimately we do have to see a continued move throughout this week, right? It's a lower volume, low volatility week. Generally speaking, these weeks do present a grind higher. I think that the initial move right now today to start the session is most likely going to be centered around a little pullback to the downside. We've hit some decent targets already. 21,010 to 020 on the NASDAQ was hit. That was a decent target to the upside as the top band of an auction area. 60.30 to 35 was hit here on the S&P. Again, an intraday balance area from 2 weeks ago has been hit. So those two major targets have been tagged. At this point, we could see a little pullback, some profit taking here to start the Monday morning session. And then, right, I think the escape above both of these areas presents a lot more upside. For the NASDAQ, I know it's kind of far away, but 21,100 is a feasible, decent area to see if we can get some kind of continuation momentum move above that, right? I think that's what really starts this week's upside momentum, which is something that we should be looking for. So as things stand, on the S&P specifically, I still would remain bullish above 6,000, which is that would represent a 30-point drop as to where prices are right now. I think it's still a fine area to find maybe some even later buyers. But the best presentation for the buy side is if we just bid aggressively above 60.35, and right, we continue that momentum move. It's a very similar case as to what happened on Friday. Remember, we talked about this pre-market in our morning plan. 59.90 on the S&P 500 was the area to break, rebid, and continue that momentum move. Otherwise, we'd see some downside momentum. And we had, I think, like 4 or 5 opportunities to sell 59.90 from the plan on Friday, which turned out extremely well. And it's a very similar concept right now. Yes, I think that it's a different circumstance where we are in a new auction, so pulling back to about 6,000 is still considered okay. But the best case scenario for the bulls is that we run above 60.35 on the SPOOs. We run above this 21,020, 010 area on the NASDAQ, and we start moving towards that 21,100. The quicker we move to the upside swing and hold these new auctions, the better it is for a potential move into all-time highs and that continued bullishness. In this low volume, low volatility start to the week here, Monday, Tuesday, Wednesday is what we're looking at. So let's go with that. I'm still bullish, still holding some swings from last week, and let us see, take it patiently today to see how we can wrap things up for the week ahead. So let's open up our live trading. Remember, you can join us. Today we have another webinar that's coming out for 4:30 p.m. Eastern that we'll do live based on our highest probability setups. And you can join us for a heavily discounted price into the end of this week. So I'll see you guys there. Take care, everyone, and we'll chat tomorrow. Let's open up our live room.